Today we're going to unpack the Bitcoin ETF futures in the United States markets. That's quite the mouthful. Let's unpack it piece by piece. First of all, what is an ETF? An ETF is usually a vehicle that's used for investors' funds to come together. In this fund, they are tracking an index of something. In this case, they're tracking Bitcoin futures. Not Bitcoin itself, but Bitcoin futures. Well, then you might ask, what is futures if they're not actually tracking Bitcoin? Futures are contracts, an arrangement for the price, not today, but in the future. And those prices vary up and down outside of the variations of Bitcoin. So anyone investing in that has exposure to volatility that's not relevant to the actual Bitcoin market. They're relevant to the contract agreements market. First, we have this index of these contracts. Okay, what are the pros and cons? Well, if we're gonna look at pros first, we'd have to say simply, if you have a standard investment account, this is probably something you'll be able to buy in your standard investment account, which means the tax reporting would be done by your investment company. They have to file the documentation of your trades, and you'd be able to hold it in these normal types of accounts. That's probably the biggest pro, just the simplicity of the person to hold it. On the other hand, let's look at the cons. Cons are gonna be, you're not holding actual Bitcoin, so you're exposed to risks of the asset changing in price, and Bitcoin's actually not changing in price. It doesn't have to change the price of Bitcoin to change what people are predicting Bitcoin will be worth in the future, which is what you would be exposed to. Just the prediction, not the actual changing in price of an asset. The second thing is, if we look at the actual futures market, the Chicago Mercantile Exchange, this is where these futures that this ETF would be indexing are currently found. As it follows the price of those, we've seen in the past that there's been quite a disparity in the difference between the price of those and the price of actual Bitcoin, meaning that at certain points in time, they can be substantially more expensive, which means you could potentially buy at a price that Bitcoin never gets to, and they could be substantially less, meaning you could end up selling at a price that Bitcoin never gets to. These are risks that you wouldn't normally inherit inside of Bitcoin, which is these over-exaggerated movements of volatility. Outside of that, that's about it. That pretty much sums up. It's just important to know that you're not actually buying Bitcoin. You're buying an index of contracts that speculate on the price. Also worth noting, if you're somebody who lives in Canada or Europe, you may be able to gain exposure to an actual Bitcoin ETF that is not necessarily available to Americans inside both European markets and Canadian markets. Canada has had an ETF for many months now that Canadians can buy that just tracks the actual price of Bitcoin. And that's all for today. Thanks for watching. Please subscribe, like the video, and if you have any questions, go ahead in the comment section. I would be happy to answer your questions. If you have ideas for future videos, please add those below too, and we'll look at whether or not it's possible to cover those topics as well.